We're here today to talk about property tax sale auctions. And you, my friend, are in luck because I'm going to give you the lowdown on how these property tax sale auctions work, what the opportunity is, and most importantly, how you can take advantage of it. Be sure to stay with me at the end because there I'm going to give you a second way to make money at these tax sales where you don't even have to buy the property, and you'll probably make more money than any bidder ever makes bidding at those properties, except you don't have to buy the property, put up any money, do any renovations, or do any of the hard stuff, just the easiest stuff, and you make tons of money with it. So let's get right into it. Property tax sale auctions are where real estate is sold, usually houses, because someone didn't pay the real estate taxes. And when you don't pay your real estate taxes for 3 to 4 years, the government can and will sell that property so they can get it back in the tax rolls and get it in the hands of someone that's actually going to pay the taxes. Happens all the time by the thousands every day, typically about 3,000 properties every business day all across the United States. And those places are great opportunities for investors to pick up properties at bargain prices. Truly the cheapest properties of any auctions that you'll ever see. Cheaper than mortgage foreclosures, cheaper than regular auctions by auctioneers. This is the bargain basement of real estate. So you can get properties occasionally for pennies on the dollar, but very frequently for big, fat, juicy discounts. So it can be a really good way to acquire properties. So how does it work? Well, the first thing you want to do is get a list. So do a Google search to start with. Such and such county, such and such state, tax sale list. So for example, DeKalb County, Georgia, tax sale list, or Orange County, Florida, tax sale list, or Montgomery County, Pennsylvania tax sale list, or Hamilton County, Ohio tax sale list. Those are examples of Google searches that generally are going to get you straight to the list of the next tax sale that's coming up. Now, if that doesn't work, call over to your local tax collector's office and ask them, hey, when someone doesn't pay the real estate taxes, who auctions off the properties or sells them? And they'll be happy to tell you that. Now, that's step one. So you get your list, and while you're there getting the list, and typically they're going to be downloadable from the website, make sure that you get the conditions of sale. You get the conditions of sale because that's going to tell you how to register for the auction. You usually need to do that in advance, so make sure you watch out for that one, and how you make payment. Usually it's same day of auction, sometimes right at the moment that the auctioneer's hammer comes down, that you pay the full balance of your bid. So this is a cash game. This is not one where you can use mortgages. This is one where you have to have the cash, usually in form of either a certified check or an ACH or a wire transfer as soon as that sale happens. So don't miss out by not being prepared. So the two things, number one, register in advance. And number two, make sure you understand what the terms of payment are and be ready to do that, because to play this game, you need cash. Some people use home equity lines of credit for that, but you're not going to get a mortgage on the property. Just understand that. So once you get your list, now what do you do? Well, the list is going to be gotten anywhere from 45 to 60 days in advance of the sale. And so your next step is to sort through the properties and figure out which ones you're interested in. Generally, the lists are very large, so you've got to winnow it down to a smaller number of properties so that you can actually check out the properties. So the first thing I do is look to see areas of town or townships that I'm either interested in or not interested in. All the places I'm not interested in, I just cross off. Because if it's, for example, too far away, if it's not in a section of town that you like, I just cross those off. And then the next step is start doing electronic due diligence. The way I do that is through Google Maps, because Google Maps has the Street View feature where you can, on your computer, look up, go to Google Maps, and then you can look up the address of the property and then just take the little man, drag him down onto the street, and then you can have a view from the last Google car that went through to see what the street looks like and what the property looks like. What I'm really trying to do and what you want to do is get rid of properties you're not interested in. That's the goal of this exercise. So you're screening properties out, you're cutting down that list, and then you do that all the way up to about 5 days prior to the sale. At about 5 days prior to the sale, you go back and pull the list again and see what properties are still left. The reason I say that is in the days leading up to the sale, people panic because they're going to lose their property, and they run in and they pay their real estate taxes. They do it because they don't want to lose their property. So a list that starts really big, like for example, Montgomery County, Pennsylvania, where I used to bid a lot, they'd have like 3,500 properties on the list at the beginning. And by the time you got to the auction, there would be 1,000 properties or less that would actually still be on the list because people ran in and paid their taxes. So at about 5 days prior, you pull the list, and then just compare. Just look to see properties you're still interested in and see if they're still on the list. If they're not, then just cross them off your list because you don't want to drive by and see properties where they're not going to be sold. So then you start driving by the properties. And thankfully, these lists are generally organized by zip code or township. So you just automatically, you'll get condensed places you can tour. Start driving by properties. And you want to look for the condition. When you drive up to the house, look, say, is this a street that I like? It's number one. Secondly, how's the house look? Does it look completely neglected? Is it empty or is it occupied? Look to see if the windows are, rectangular or square, because if they're not, if they've gotten like twisted out of shape where they're more like a trapezoid, that's a sign of a very serious foundation problem or termite problems, not something you want to get involved with. Look at the roof line. Is the roof straight across the top or is it bowed in the middle? If it's bowed, again, signs of serious problems, stay away from it. Because sometimes properties that are going to tax sale, it's just because it's in such bad shape, the owner can't deal with it. So you want to make sure that you're fully aware of what kind of condition the property's in as best you can be. There are no open houses. They don't do that for you. So best you can do is drive up to the property, look at it from the street. And if you're feeling bold, which you should if you're in this business, get out of your car, go knock on the door and see if anybody's home. And if they are, talk to them. Find out, are they a tenant or are they the owner, soon to be former owner? Find out what their plans are. And get an assessment of the condition of the house. Just ask, the house have any problems? When you're walking up to the house, just peer in the window, just casually look in the windows and see if you see any falling in ceilings. I had this one, never forget this. I was working in the city of Philadelphia and they have what are called row houses there, called townhouses in most other places. But the row houses are generally brick or stone and they're joined, like a townhouse. So they're all joined. And I drove up to the place. It looked great. I was like, this is beautiful. I love the neighborhood, love this whole thing. So I went ahead and started walking to the door. And as I went, I was glancing through the window and I'm like, wait a minute. I see the sky through that window. There's something really wrong here. So I diverted and went over to the window and looked up. And sure enough, you could see the beautiful blue sky through the window. And I kind of pulled up a little bit and the entire house was gone. It had collapsed into the basement. So I guess there was a fire probably, and the house probably sat for a couple of years and it literally just collapsed into the foundation. So obviously that was not a house that I wanted. But if I hadn't been bold enough to get out of the car and look, or if I hadn't been smart enough to go drive by the house, I wouldn't have known that. So before you put down your hard-earned money on a house, make sure that you check it out as best you can. Now, in each day that we're going to look at properties, we pull the list again every morning. We cross off properties that are now gone because someone has paid the taxes, and then we go out for the day and look at properties. You can't spend a lot of time on them, but you have to spend enough time and make sure that you bid low on these properties. Just assume the worst. These properties have been not paid taxes for 3 to 4 years. They're not maintaining the property. So just, keep in mind, these houses can be in very rough condition. So just keep that in mind. And you're better off missing a potential deal than you are buying something that's actually a bad deal. So do due diligence, be conservative. For me, I generally don't want to pay more than 60, maybe 65% of after repaired value minus whatever I think the fix-up costs are going to be. Because you just need to leave a big margin because you don't have enough information to work on small margins. So that's basically the way tax sales work. And some of the problems you'll run into, you can have title problems. You can have things called rights of redemption, which is the right for the owner to come back after the auction has happened, pay the taxes and penalties and interest, and then keep the property. Now, you'll get your money back and usually a little bit extra, but that's not what you wanted. And in some places, those rights of redemption are long. Like, for example, in Georgia, it's a 1-year right of redemption. You can't even set foot on the property for the first year. So you just have to keep that in mind that there can be surprises. So you really want to educate yourself on this before you go buying. Got a great resource for that. I have a friend named Tony that is probably the leader in this field. Just the leader. He's the leader at buying at tax sales. He's great at teaching it. He knows all the rules in all the states and he shows you how to do it. He also has this really ninja method of buying properties where he just gets a list of properties that the county is offering and just looks through them and picks out the ones he wanted. There's no like people pay at the last minute or anything like that. Much simpler process. He is the master of that, super ninja. So he teaches about that. If you're interested in learning more about that, I did an interview with him. We put it up on YouTube, so it's a free video for you to watch. Probably 20 minutes long where he talks about what he does and really educational. And you'll understand after you watch that video how good Tony is. So go ahead and watch that. I put a link to it down below. Second thing, remember I promised I'd give you a second way to make money at tax sales. I do a business called excess funds or overages. And the overages business is where we go and we get money that's left over from the tax sale for the former owner. A lot of times there's thousands or even tens of thousands of dollars left over after these tax sales that homeowners qualify to go claim, but they rarely claim because they don't know about it. They don't know the money is there. It never occurs to them that they could lose their house at tax sale and still get paid money. They think, oh, they sold my property, so I guess they keep the money. So they have no idea. So what we do is we get lists of these monies that are being held, and then we reach out to the homeowner and we say, hey, would you be interested in getting some money? We found some money that you're owed by the government. And if you're interested in working with us for a contingent fee, we'll go ahead and get you that money. And that is a really great way to make a lot of money, to help a lot of people, and have an absolutely wonderful business. It's my favorite business. It's what I spend my days doing these days, and I think it's really wonderful. Huge opportunity. There are about 3,000 tax sales per day, every day in the United States, a huge opportunity. We have a partial database of these claims in-house, and we have over 14,000 claims in that database, over $350 million sitting there waiting to be claimed. And we only have part of the country. We don't have the whole country. So huge opportunity, hugely valuable service, and a really feel-good business. If you want to learn more about that, then you can click on the link down below. You'll see a link to my intro to the Overages Business video. Go check that out, 15 or 20 minutes long. I'll give you the lowdown on that business and the next step if you want to actually pursue that as a business. So this is Attorney Bob Diamond. It's been great having you here today. If you like this video, give it a thumbs up. And if you want to know more about tax liens, tax deeds, tax sales, overages, then definitely subscribe to my channel because that's where my expertise is. And that's what I'm talking about every day. So good luck, whatever you decide to do. Go check out those videos with Tony on my intro to overages, and I will see you next time. Bye for now.